Hello, welcome to Accounting with Arpit Garg. Today, we are going to start valuation of goodwill on the basis of average profit method. While studying concepts, we already read that average profit method has two types, simple and weighted average profit method. Let's look at the steps of calculating goodwill according to simple average profit method. First, calculate normal profit by adjusting abnormal gains and abnormal losses. Then, calculate average profit by dividing total normal profit by number of years. Then, calculate or determine number of years purchase. Here in class 12, it is already given in question, so we need not calculate this. Then find the value of goodwill by multiplying average profit by number of years purchase. Let's look the difference between number of years and number of years purchase. Number of years means the years of which profit is taken into consideration, while number of years purchase means the number of years for which firm is likely to earn same amount of profit even after change of ownership because of the efforts put in the past. It means that even after change of ownership, there will be no effect on the firm's profit for next few years. Those expected few years are called number of years purchase. Let's start a question. You can please pause the video and write down the question. Let's read. Hare and Com are partners sharing profit in the ratio 3:2. They admit oil into partnership. It was agreed to value goodwill at 4 years purchase on the basis of simple average profit of past 5 years. So from here we got past 5 years means number of years as 5 and number of years purchased as 4. Then profits are given to us. Then our adjustments. Scrutiny of books of accounts revealed that an abnormal loss of 15,000 was earned in the year ended 31st March 2016. An abnormal gain of rupees 20,000 was incurred in the year ended 31st March 2018. Expense of rupees 40,000 incurred to overhaul a machine on 1st April 2017 was debited to profit and loss account instead of being debited to machinery account. As this is 1st April which comes before 31st March, so we will solve our third entry first. Then depreciation is charged on machinery at the rate 20% on diminishing balance method. Closing stock as on 31st March 2019 was overvalued by rupees 25,000. Calculate the value of goodwill. Let's start. Make a table for calculation of normal profit. Then write the year ended and profits given to us in question as it is. Then our adjustments. First was an abnormal loss of rupees 15,000 in year ended 31st March 2016. As abnormal loss might or must have reduced our profit, so now we will increase our profit. For this, we will add this 15,000. Then as I told you, first we will look for third entry. So expense of 40,000 to overhaul a machinery, to increase the capacity of machinery. It must have been debited to machinery, but we debited this to profit and loss account, which means we marked it as expense. So now we will add this back in the year 2017-18, 40,000. Then abnormal gain was incurred in the year ended 31st March 2018 as it is abnormal gain, it must have increased our profit. So now we will deduct this amount to decrease that profit, to normalize it. Then in third adjustment, depreciation is charged at the rate 20% on diminishing balance method. This rupees 40,000, when we did not debit it to machinery account, we did not increase the value of machinery. So we know that we must not have charged depreciation on the machinery. So now we will charge that. So 20% of 40,000, that is 8,000, we will reduce in the year 2018. Then 20% of remaining in the year ended 31st March 2019. Then 20% of the remaining in the year ended 31st March 2020. Then our last adjustment, closing stock as on 31st March 2019 was overvalued. As closing stock was overvalued, which means our credit side was increased. Credit side belongs to our income side, which means this entry must have increased our profit. So now we will reduce this amount in the year ended 31st March 2019. And as we know, closing stock of 1 year is opening stock of another year. So we will add this amount to the next year. Then we will calculate our normal profit by adding profits and adjustments. Then add all the amounts to find out total normal profit. Then we will find average profit by dividing normal profit by number of years. So we will get our average profit as rupees 2,07,096. Then we will multiply this by number of years purchased to get our goodwill, which comes out to be 8,28,384. Done. Now let's see profits method, that is weighted average profit method. Let's start. First calculate normal profit, then assign weights. This we will see while studying question how to assign weight. Then calculate weighted average normal profit by dividing total normal profit by total weights. Then find the value of goodwill by multiplying weighted average profit by number of years purchased. Let's start our question. This is the same question we did earlier, so you need not write this again. We can see from there. Then let's make a table for calculating normal profit. And here, after calculating normal profit, we will calculate weighted profit in the same table. So write all the entries up to normal profit as they are same. Then we are assigning weights. As we know, my previous year's performance will be more analyzed rather than analyzing performance of 4 years back for calculating my performance of next year, which means recent years are more valuable. So we will give more value to the most recent year. So 5, 4, 3, 2, 1. 5 to the most recent year and 1 to the last year. Then calculate weighted profit by multiplying normal profit with weights. Then find total of the both. Then calculate weighted average profit by dividing total weighted profit by number of total weights. That's come out to be 2,40,320. Then multiply this amount by number of years purchased to get the value of goodwill, which comes as 9,61,280. Done? That's it for today. This is Accounting with Arpit Garg signing off. Bye bye. Take care. Stay safe. Keep learning. Jai Hind.